Today's podcast, I'm going to talk to you a little bit about annual summary on crop insurance participation, especially with regard to one of these shallow loss plans, SCO, supplemental coverage option, or stacks for cotton. Uh, for the 2015 crop year, we've gotten the summary data and have been kind of pouring through it. You've probably seen a number of different summaries of people said this percentage of the farmers purchased either of these products. The graph I'm showing now is basically my calculation, and so I need to describe what it is. For rice, 14% of all policies sold were SCO for rice. So effectively, if you want to kind of get to a sense of how many, what would be 100% of our producers purchasing SCO for rice, then that number would be 50%, because for SCO in particular, there has to be an underlying policy. So that percentage would never, by math, the way math works, would never be above 50%, because there has to be an underlying policy. So technically, if everyone bought SCO and an underlying, then that'd be 50%. So that's how these numbers were calculated. As you can see across the United States, SCO is only available if you pick price loss coverage. So those crops like corn and soybeans that were very heavy into ARC on their Title I protection, obviously there's not going to be very high ever, because those producers are not eligible to purchase it. So crops like wheat or grain sorghum, and even cotton that's not a Title I protected crop anymore, would more likely to have higher participation rates. At this point, you can see from the graph that basically stacks at 12.5% of all cotton policies sold in 2015 were stacks policies, and that's we can say, is that high, is that low? Well, for the first year of the program, it's probably about right. With regard to any of these plans, it's not where I don't believe SCO paid very much last year. A lot of people say that's a bad thing. Remember, these are insurance products, and so technically you'd have to have a loss to get a payment. Looking at the next graph is a lot more information about stacks. Obviously, cotton producers across the United States are relying on stacks as their primary, that and the loan, as a primary safety net to keep them afloat during these low price times. And this is a summary of most of the upland cotton, or all the upland cotton states with crop insurance sales. As you can see, across all the states, there was about 2 million acres of stacks policies sold. There at the bottom, 2.4 million acres, and the liability was quite large, $123 million. And you can tell that the premium, the premium is the total premium that would be charged against that liability, and the subsidy is a government paid portion. And I've taken and subtracted the subsidy from the premium to calculate a producer's share. So with stacks, the subsidy is 80%, and so you'd know that $18 million is basically the producer's share, and the government is helping with 80% of the cost. Also calculated premiums per acre across the different states. You can see that it's as low as $5.72 in Missouri, and as high as $11.41 in Kansas. Not sure why the big disparity. Could have. I mean, this program is an area-based plan based off county yields, and so there must have been a lot of variability in the county yields in those states that had higher premiums. The last thing I want to talk about in particular is comparing the coverage of stacks to what NASS reported in the summer of being planted acres. Roughly 8.8 million acres of planted cotton in the United States, of upland cotton, and stacks acres as a percent of planted acres. Obviously, Arizona there was none, but it goes quite high, up to 58% or 60% in Virginia, 58% in Florida. So across all the United States, 27% of the acres that were considered to be planted were covered by stacks, which there'll be quite a bit of question of whether that's going to go up or down this next year. Why is that? Because again, I could have put one more column on here that it was said indemnities, and stacks didn't pay in any state to any producer this past year. There wasn't a loss triggered, and so you have and a producer's mindset is, I'm paying for this, and I didn't get a return on it. And unfortunately, that's we've got to adjust our mindset when we're thinking about insurance products. You bought insurance, and luckily you didn't suffer a loss. That's how you need to think about it. Overall, the United States, down at the very bottom, the average premium charged on stacks was $7.54. When we were doing most of the educational training, we talked about the stacks premium being somewhere between $5 and $10 an acre. So this falls in the middle of that range. So as the next few podcasts I'm going to be doing is going to be exploring some of the SEO data for 2015 crop year for some of the other crops. Thank you.